Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to this presentation on Elliott Wave, predictive trading. Well, that's a pretty interesting concept, isn't it? Predictive trading. We're going to talk more about how Elliott Wave actually does just that. Helps you predict where things are going to go to make you a better trader. Before we get any further, we do need to show you this disclaimer. Please read it in detail at your leisure. An important thing to note is we are not registered to give individual investment advice in the United States. The topics we're going to cover is Elliott Wave theory. If you're going to learn how to predict where things are going to go or use Elliott Wave as a predictive force in your trading, you're going to need to know the basic concepts of Elliott Wave theory. Inside Elliott Wave theory, there's something known as the impulse pattern. It's one of the primary concepts. And that's one of the things that we utilize at Elliott Wave Options. We'll also talk about how we take that impulse pattern and show you how to trade using it in our impulse strategy and give you tons of examples of actual real trades using exactly that, the impulse pattern in our strategy of trading options. During this session, you can ask questions. Now, time is limited, so I'm not going to stop during the presentation to answer questions, but we do have our support team online to help you. You can ask questions by typing them into the chat or the Q&A, and our support staff will get to them as soon as possible. So with that said, let's get started. What is Elliott Wave Options? Well, that's a good question. We're a service to help you become a better trader. That's our primary goal. And we've designed this for self-directed traders and investors. We provide actionable trade ideas and case studies. Why is it called Elliott Wave Options? It's a great description of what we do. We use Elliott Wave analysis to identify trade opportunities, and then we use specific option strategies to help us take advantage of those opportunities and manage risk. But before we get into the specifics of these strategies and how we utilize the Elliott Wave impulse pattern in our impulse strategy, let's have a look at the performance. If you take a look at this chart, since inception, you can see that we've had 151 total trades, of which 84% have been winning trades for an average ROI of 64%. That would be an annualized return on account of 176%. And that's a non-compounded return. I'll talk more about that in a moment. In addition, we try to keep each of our alerts that are sent out at $500 of risk or less. Now that's based on a recommended account size of $5,000 per strategy. So that means there's never more than 10% of your account at risk in any one alert. So if we were to plot these returns on an actual month-on-month chart, you can see we've done a pretty good job of starting in the lower left and moving to the upper right. As I mentioned, we recommend starting with an average $5,000 account. And over the years, that would have currently grown to just under $40,000. Now remember, these are non-compounded returns. Before we get too excited though, let me explain a couple things. Mainly, we didn't move from left to right in a straight line. I think everyone would agree that over the long term, our performance has been outstanding. But that's a very important concept, having a long-term perspective. Look at these dotted lines throughout the years. Timing is everything. If you had joined the service at the beginning of any of those dotted lines, for a few months, your account was going through consolidation, possibly even a drawdown. But if you joined at the end of those lines, your performance was straight up. Your account was growing immediately. So some of you are thinking we're zeros, others are thinking that we're heroes. But it's so important to keep that longer term perspective in mind. Trading is not easy. The account doesn't necessarily grow up every single month. Think of what's been going on in the year of 2020 and 2021, dealing with the pandemic and all the different factors that have affected the markets. Even looking at 2020, when the market cratered, we did have a little bit of a drawdown, but nothing significant and nothing close to what the market did. So keep that long-term perspective in mind. All right, let's get into Elliott wave theory. This is a quick primer for the uninitiated. What is Elliott wave theory? It's a method of analyzing cycles in the stock market. Just like the economy and property prices, the stock market has cycles. Elliott wave analysis helps us work out where we are in a cycle and predict what is likely to happen next. That is such a key concept of Elliott wave. There are a lot of technical indicators out there available to traders. A lot of them are known as lagging indicators, meaning they're taking the information that's already happened and giving it to you in some sort of a graphic picture. But it's telling you what's happened in the past. The beauty of Elliott wave is it can take what's happened in the past, but give you a pretty good picture of what's likely to happen in the future, the predictive nature. Elliott wave analysis is a form of technical analysis. As defined by the CBOE, technical analysis is a method of predicting future stock price movements based on the observation of historical stock price movements. In other words, technical analysis allows us to look at a chart and identify the pattern on that chart, and from that pattern, get a good idea of where the stock is likely to go. We're not thumbing through pages and pages of financial reports, looking at income statements and balance sheets, etc. In basic Elliott wave theory, the belief is markets move in a series of impulses and corrections. So if we were to look at a chart, the horizontal line being a time reference, the vertical being price, everyone would agree that even trending stocks don't move in a straight line. Although the overall trend is up, within that trend, there's a series of impulses and corrections. The impulsive moves are those in the direction of the general trend, and the corrective moves are counter to the general trend's direction. Each time one force, supply or demand, and this is a really important concept because this is exactly how stock prices move. Stock prices move based on supply and demand driven by fear and greed. So each time one of those forces overpowers the other, even for the shortest period of time, the market will change direction and a new move begins. And furthermore, these changes in directions create these patterns in the market. Elliott wave theory is a way to track and predict these changes. Here's a 5-wave impulse pattern. Lots of people have seen this, even if they're not really familiar with Elliott wave analysis. But what exactly does all that mean? Well, let's look at a real-world example. You take a look at this stock, you can see that from the period of time between March and August, 6 months, the stock moved from $80 to $115. This is a clear 5-wave impulse pattern. But why? Why does this work? And why are these specific labels on the chart? Well, let's take a look at why. Elliott wave works in the real world, and that's important. It's not just a concept. It actually works. In the basis of an upward trend, you would have started with a downward movement. The downward movement is coming to an end. So wave 1 is normally not the strongest move, a weak move, likely short covering. The start of an Elliott wave trend, interestingly enough, is usually weak. It doesn't just start off as a really strong move. In fact, the wave 2 is some initial profit taking from that move to the upside. Few people bought in, they're already ready to take profits. So at this point in time, we don't really have evidence that a big trend is starting. The first key is that a higher low is established. And then we start the next impulse move. And specifically, once that wave 1 high is taken out, institutional buying, what they call the smart money, the professional traders, if you will. And wave 3, because of this institutional volume and institutional power, is the strongest of all the waves. At some point in time, those institutions want to take a little bit of money off the table. So you get the second corrective move. It's an orderly pullback. just profit taking from those institutions. And that's important. They don't want this to look like a strong move. They're just kind of siphoning some off, and then to attract the retail traders to come in and buy the rest of the shares off their hands. So that's why wave 5 is not nearly as strong as wave 3, because wave 5 is dominated by retail traders. They're coming in and buying the rest of the shares that the institutions are selling because they made a good chunk of money in that wave 3, and now they're topping off their profits, if you will, as the retail public comes in. It's always this way. The retail traders always come in at the end of a trend. It happens over and over, time after time. So an important concept to focus on is the fact that when that wave 5 ends, we're due for another change in direction. That's when the corrective move usually happens following the wave 5. Commit that concept to memory, because I'm going to show you some examples here in a few minutes. All right, now let's get into the predictive part. You have a basic understanding of the impulse pattern. Let's talk about how to use that as a forward-looking indicator. So let's take a look at some examples in real stocks. If we had identified the first 4 waves, don't you think it makes common sense that we could have a pretty good idea where that wave 5 is going to go? Part of the predictive power of Elliott wave. Estimating a target for the wave 5 is done not just by picking some point out into the future. You may have heard of Fibonacci ratios or Fibonacci numbers. A lot of people look at those. Well, they're incorporated within Elliott wave as well and help in that predictive power, the part of forecasting where a price is likely to go based on where it's already been. And in this case, you can see the process worked out perfectly. The target was spot on. Here's another example. So what do we talk about when we were talking about the impulse pattern? When a wave 5 is completing, what's likely to happen? A change in direction. You anticipate that as you see the wave 5 coming to an end. Now that correction or change in direction can take different forms. It can be a complete new impulse pattern in the opposite direction. It's still the same 5-wave pattern, but moving in the other direction. We also talked about how Elliott wave works, whether they're uptrends or downtrends, and the impulses and corrections are determined by the direction of the general trend. Well, now we're down at the end of another wave 5. What's likely to happen? Another possible change in direction. And this process plays out over and over and over again. In this example, you can see we've topped out on a wave 3, and we have the wave 4 forecast there in a potential price target. So the forecasted target is the wave 4 correction, also utilized by Fibonacci ratios. And again, boom, the forecasted move was spot on. The wave 4 is labeled right at a very important Fibonacci level. Well, what do you think we can do from here once we have that wave 4 target achieved? A new opportunity for another wave 5 target? Absolutely. Look at this one stock, 3 successive 5-wave impulse patterns. In this example, you can see that the price targets were amazingly accurate. Now, does Elliott wave work every time? No, nothing is 100%. But hopefully what you're seeing and starting to get excited about is the difference between Elliott wave and other technical indicators. Other indicators are giving you an idea of the strength of a move, whether it's buyers or sellers in control, etc. But Elliott wave is giving you that and price targets. So not only do you have an idea of where direction the stock's likely to go, you have an idea of what price is likely to reach. You can see how that can make your trading far more successful. So let's talk about how we use Elliott wave in a trader's approach. The 5-wave impulse patterns are just the tip of the iceberg. We teach a more detailed approach, including corrective patterns like zigzags and triangles. However, the concept remains the same. Elliott wave allows us to predict future market direction. Now let's talk about the impulse strategy. This is how we take what we just talked about in the impulse strategy and show you how to profit from a trending market. So what is the Elliott Wave Options impulse strategy? It's a directional strategy for stocks we expect to go in one direction, up or down. We just looked at how that Elliott Wave impulse pattern is the same to the upside or the downside. So we're targeting trending stocks, either direction. The patterns that we're looking for are impulses or zigzags. We can profit from directional moves and implied volatility. To take advantage of that, we're going to use specific option strategies like long calls and puts, debit spreads, and butterflies. So let's take a look at some recent trade alerts. These are examples of Elliott Wave option impulse strategy trades, meaning these are actually real trades sent out to our subscribers. If you haven't seen it before, this is what our member website looks like. This is the trade listing, which shows every single alert that's been sent out and all of this detail included in the alerts. Let's take a look at an example. This one was on the XLF. The strategy was a long call. You can clearly see the Elliott Wave 5-wave impulse pattern. We talked before about if we had wave 1, 2, 3, and 4, could we have a rough idea of where wave 5 is likely to go? That's the exact setup that was used in this alert. There was our expected wave 5 target price, and there's the actual message that was sent out to subscribers in the alert. Just a quick note there. This is an ETF, the XLF. There were a number of financial stocks showing up on the search results. So when you have a number of stocks in the same sector, isn't it likely that the entire sector is moving? So rather than trying to pick or choose between individual stocks, we just sent out an alert on the sector in general. Makes a lot of sense, doesn't it? So with the target price set right around 34, we selected a call with a 33 strike price. There was our entry. You can see right there at the previous wave 3 high, expecting it to break that and move to the wave 5. It did just that. In fact, notice that gap up. So we're getting a little bit of a spike in volatility. Remember where we said we can profit from the directional move and implied volatility? When you get a strong directional move, like a gap like that, that's where that spike in implied volatility comes in. So the message that we sent out was the fact that, hey, we haven't quite reached our price target yet, but we've hit our profit target. So we sent out the exit alert, which generated a 100% gain in just 8 days, even though the stock hadn't actually hit the price target yet. That's the benefit of the implied volatility part. And the fact that if you have a nice gain, don't get greedy. 100% in 8 days, take that every time. However, I do want to highlight, they don't all move that fast. We wish they did, but they don't. Taking a look at this example on Apple, you can see we generated a really nice return, 175%. But you can see this one took a bit longer. So they don't all move in 8 days, but over time, the patterns usually play themselves out. So those were both nice trades. But we've talked about the fact that nothing's 100%, nor is Elliott Wave. We do take losses. We highlighted that in the equity curve in the beginning of the presentation. Here you can see 2 back-to-back posted losses. We post everything. We are 100% transparent. We do try to manage our losses through an adjustment process and keep them as small as possible, but they do show up. But we share everything with you. The mark-to-market graphs on the right-hand side show you where every single alert is every day. 100% transparency. Now let's take a look at another example in one of our favorite strategies, the out-of-the-money butterfly. Looking at this chart pattern, you can see where the stock, Google in this case, is just breaking above a resistance point in a wave 3. Now this is key. A lot of people talk about don't trade the wave 3 because you don't know how far it's going to go, when the wave 4 correction is going to come. etc. This is where our confirming indicators come in. And my favorite of our confirming indicators is the DMI, the directional movement indicator. There's a lot of information in this one indicator. The green line gives you an idea of buying pressure. The red line is selling pressure. The black line is the ADX, which tells you how strong that current trend is. This is one of the primary indicators that allows us to trade the wave 3, which generates a lot of our profits within Elliott wave options. So looking at that indicator, it gives us an idea that that wave 3 is likely to continue. So here's the message that was sent out to our subscribers with the alert. We expect the wave 3 to continue moving to the upside. So we set up a butterfly out of the money, a unique way of setting up a butterfly. So many people are used to a butterfly being an at the money strategy. Not necessarily. You can trade it and place it out of the money. Well, how do you do that? Well, you start by picking your price target, and there you sell 2 call options. And then you buy a call option with a higher strike, and you buy one with a lower strike, creating the butterfly. There's the risk graph of the butterfly giving us our target price. Now, when you look at that risk graph, most people are used to the fact that the stock needs to stay within those wings to generate a gain. Not with an out of the money butterfly. An out of the money butterfly profits as the stock moves towards those wings. So there was our entry, breaking above that area of resistance. And as the DMI showed us, the stock was expected to move higher, and it did. And you can see how the DMI is confirming that move to the upside. Now, at this point in time, Google has moved rather quickly. Not normally what you would like with a butterfly strategy. But again, this is not an at the money butterfly. This is an out of the money butterfly. We've taken the strategy and made it directionally based. We're exiting this position and we haven't even reached the lower strike yet. Different from a lot of people and how they're used to trading butterflies. But using them this unique way allowed us to achieve a 93% return in just 19 days. Not the normal type of return you get out of a butterfly. Let's take a look at another example of an out of the money butterfly. Here's the actual message that was sent to our subscribers. There's our price target. Sell the 2 options there. Buy one with a higher strike. Buy one with a lower strike. Creating your risk graph right at your target price. Notice how this coincides with that wave 5 target. We've already talked about how those wave 5, the target prices are achieved through the Elliott wave system and the Fibonacci levels that coincide with Elliott wave. So here's our entry, expecting the stock to continue to move to the upside. Here's another really unique factor with an out of the money butterfly. When you reach the target, if you do move within the wings, you generate an even higher return. And if you generate a movement within those wings closer to expiration, you generate an even higher return. So it just gets better and better. You make money if it moves directionally towards your butterfly. You make even more money if it gets within the wings, and you make even more money if it gets within the wings closer to expiration. Now note where the entry was. The stock went sideways for a while. With most strategies, that sideways movement would have been hurtful. Not with a butterfly. Believe it or not, time going by is helpful, even though it's a buy-side strategy or a debit strategy. Look at that return, 500% in just 64 days. Now, no wonder you think that it happens like that every time. These are outliers. These are unusual returns. It was a perfect storm, getting the directional movement right, taking time, getting close to expiration, landing right between the wings. But they do happen. Let's take a look at what you can expect out of this style of trading. Here's a listing of our year-to-date trades that have been closed through September of 2021. The left-hand side, the vertical axis is profit and loss, and the horizontal axis down the bottom, you can actually see the stock symbols. Well, we started the year off with a bang, a losing trade. Not exactly the way you want to start the year, but hey, losses do happen. Then we followed that up with a nice run and a rare 800% trade. Please note that's rare. But as we said with that butterfly, the big trades do happen. This is a typical example. There were 9 winners in a row. That's a pretty normal run. You can see the profits were a bit more normal. So then we had a couple of losses, and this is normal. Typically we'll have 1 or 2, but this strategy hasn't had over 3 consecutive losing trades. Well, then we went on a really nice run, 18 winners in a row. That's unusually long, but again, it does happen. These are all real results of actual alerts sent out and closed with our subscribers. Well, then we had another losing trade. Now, I pride myself in the adjustment process that we utilize at Elliott Wave Options and with our alert service, but nothing works 100% of the time. In this case, the adjustment didn't work. That's normally how we limit the losers. In this case, it didn't, so we had an unusually high losing trade, but they're rare, and we followed it off with 5 consecutive winners right up through the end of September. Those last 5 trades all closed in the month of September. So now that you've seen the results, how does this Elliott Wave Option service actually work? You learn trade by trade. Here's our process. We have daily scans to identify potential trade candidates. From that list, then apply Elliott Wave analysis that you've been learning throughout this presentation to identify of those trade candidates, which ones we want to select to send out as entry alerts to our clients. Now, they are sent out in real time, and you can receive the alerts via email or SMS or both, whatever your preference is. Now, there's a lot of alert services out there to send out entry alerts, but we take things a step further. We teach you how to actually manage trades. All of our new trades are added to the Elliott Wave Options member website. Here's an example of exactly what the detailed analysis looks like for every single trade alert that's sent out. All of this pertinent information is listed right there on the website for you. The opening, the date, the strategy, the stock symbol, which portfolio was in, a note that goes along with the alert when it's sent out, and a graph. The actual chart is published with each alert, giving you details of the technicals, explaining why we actually selected this as an alert to be sent out. Additional information available to you on our member website. All our positions are reviewed each and every trading session. So not only do you get the entry alerts sent out, you also get adjustments and exits. And again, I want to reiterate, there's a lot of alert services out there that only send entries, and then you're on your own. You have to figure things out from there. We don't do that. In Elliott Wave Options, we send you the entry, any adjustments that are made, and the exits, all sent in real time. In addition, we do a trade analysis of all our positions, even while they're still open, and give you the opportunity to ask questions directly about any of the current trades or past trades. Let's talk about how that process works. Every trade, every week. Insight for our insiders. Love that title. Every week we do an insiders meeting. It's a live webinar where we go through all the details, just like you're seeing on the screen, the trade detail of an individual trade from entry through the adjustments, if any, and the exits. All the detail is listed there. If you have any questions about it, you can ask about it, but we'll cover every single one of our alerts in detail every single week. And you're there live. You can actually even ask voice questions if you want to, directly to me. So now that you have a pretty good understanding of how Elliott Wave Options works, there's one more very important detail that I want to highlight. We pride ourselves in the education that we provide to our subscribers. And we do that through online courses and trading education. It's high quality, real world trading education. When I say real world trading, I mean, you're getting the education from a trader's approach, from an actual trader, and that experience over the years is invaluable. This isn't the same cookie cutter education that you can get out on the internet that a lot of other services utilize. Our education is presented to you in video and text formats, so whatever your preference is, and it's on demand, so you can consume it at your own pace. We have premium and mastery level courses, depending on your subscription level, and the types of content that we cover include our Elliott Wave option strategies. So you can go through the playbooks and learn in depth the strategies and how to implement them. We also go more in depth into Elliott Wave. We just scratched the surface in this presentation. There's so much more to it. And you can see that we have an Elliott Wave core class, and then we move up to the mastery classes from the impulse pattern and the zigzag patterns that we've talked about throughout this presentation. We talk about option trading, learning the basics of options, learning the individual strategies and how they're constructed, how options are selected, etc. And we take a deep dive into our indicators so you understand how our system works. We've talked about the DMI being our favorite technical indicator, but we also go in depth into the other indicators that we utilize as well. So now you have a complete understanding of how our alert and educational service works. Let me tell you how you can become a subscriber. Our Elliott Wave Option Impulse Strategy is a monthly subscription for just $129 a month. It includes all the trade alerts delivered to you via SMS and email, entries, any adjustments and exits, the chart analytics and plan for each and every trade, all the insider meetings and member access to our website, full support and your questions answered, in addition to all of our premium educational courses. Let me give you some thoughts on why, if you're a beginning trader looking to get into the world of trading, or if you're a current trader looking to improve your results, that this is the best and most effective education out there. Number one, it's easy to get started. We have no upfront costs or contracts. You're not signing up for a year in advance, etc. It's month to month. You can cancel at any time. Our premium trading courses, there's no additional fees. All of the education is included for our current alert subscribers. The live insider meetings, you have direct access to me, and you can ask questions via voice and or typing them in on the Q&A. There's interactive support. If you have any questions, we'll get them answered for you. You learn with a mentor. There's no need to go it alone. This is a big one for me. When I first started, I tried doing it by myself. I had some marginal success and then was very unsuccessful. What changed things for me is I decided, let me follow somebody that's been doing this for a while, that has the education and has the experience. That's what turned things around for me. I want to be that for you. We have a published track record. We are walking the talk. You want to make sure that if you're a subscriber to an alert service, that they're actually transparent. They're sharing everything with you, warts and all. And you can earn while you learn. Obviously, this is up to you, but you can follow along with the alerts in your own account if you choose to. A lot of our subscribers love the education so much, they don't even care that much about the alert service. Clearly, with all the content provided, $129 a month is a great value. And if you go to our website, that's our normal price. But in exchange for your investment of time with us in watching this presentation, I'm going to offer you a special discounted price of $89 a month. I want to impress upon you, this has never been offered before, and you will be grandfathered in. All you have to do is sign up before October 31st. As you can see there, included in that fee are our premium educational courses. But I'd like to highlight that we've just completed some new mastery level courses on the impulse pattern that we've been discussing in this presentation. Our impulse pattern mastery class, over 3 hours, 10 lessons, a 19-page manual, which is going to give you a deep dive into trading the Elliott Wave impulse pattern. Our zigzag mastery class, it's going to teach you how to trade waves within waves. It's one of my favorite patterns within all of Elliott Wave. It's over 5 hours and 36 lessons with a 30-page manual included. And our DMI ADX indicator mastery class, my favorite technical indicator. So you'll really nail how to confirm the signals that we're seeing within Elliott Wave with this indicator. Class is over 3 hours and 23 lessons with a 20-page manual included. Let's reiterate what's in this Elliott Wave Traders bundle. 3 courses, 3 manuals, over 11 hours of in-depth education, 69 video lessons with the 3 course manuals. Individually, the classes total $1,397, but for the bundle, all the 3 classes together, discount the price down to $999. However, here's what I want to do. In addition to the $40 per month discount, grandfathered in for life, as long as you sign up before October 31st, I'm going to take the $999 bundled educational courses that we've never offered before, and I'm going to give that to you for free. But I want to reiterate, you have to sign up before October 31st. This deal has never been offered, and it will go away on October 31st. To subscribe, simply go to the link at the bottom of your screen, www.ewotrader.com/web-offer. Let's summarize. You get all of our education and our alert service, all of our support, the weekly meetings, direct access to me, a great value at $129 a month, discounted down to $89, and you're grandfathered in for life at that price as long as you sign up before October 31st. And as an added bonus, I'm throwing in for free our bundled educational courses, which even at a discounted price is $999. So think about this with me. Remember, it's month to month. You can sign up, give it a try for a month. You're getting $1,000 worth of education. Take the education, and if after a month you find out it's not for you, you can cancel at any time. What do you got to lose? As an additional bonus, we'll actually add a discussion, a heated discussion, if you will, with the rest of the staff at Elliott Wave Options, that if you sign up before October 15th, I'm going to throw in a $40 voucher for Elliott Wave Option merchandise. You can go to our store, get a shirt, get a hat. The staff felt like this is completely unnecessary, giving the farm away here. But this is something that I want to do. I really appreciate people's time. It's so valuable, and appreciate you taking the time to go through this presentation. So look at this. You sign up before October 15th, and then if you decide after a month that you want to cancel, you've gotten $1,000 worth of education and a t-shirt. If this offer doesn't motivate you to become a subscriber, I don't know what will. Take advantage of this offer. Couple quick reminders. Sign up before October 15th, get the free $40 voucher. Make sure to sign up before October 31st to get the discounted price and be grandfathered in for life. If you have any questions, please email us at support, and we'll be happy to answer them for you. Thank you so very much for your time. Look forward to talking to you on our next Insiders meeting. Take care, everybody.